In the intricate world of trading, understanding the flow of market momentum is key. There's a tool that I'm going to show you, rooted in the volume and price action of assets that can uncover hidden market dynamics. Traders, get ready for a groundbreaking session where we reveal a fusion of classic analysis and modern trading tools. You'll discover a powerful synergy between an indicator that's been battle-tested for over 40 years, which was created by a stock market legend, now fused with the modern tactical edge of Shark Algo. In this video, we're going to go over a powerful strategy that dominates not only in stocks, but the crypto and Forex markets as well. I'm going to lay out step-by-step the rules for you, and we're going to quickly dive into the mechanics of the market so you can step up your trading game by the end of this video. Remember this, the market forces are driven by the sentiment of the smart money or the biggest players. When you can read their clues and find their footprints they leave behind, you'll be able to identify where the biggest traders and investors are buying and selling. And this, my friends, is gold. This indicator gauges the accumulation and distribution within a market. It navigates the buying and selling pressures, identifying where the big market players are leaning. This tool dives into the market's pulse, not only by looking at price movements, but by integrating volume into the mix, painting a clear picture of the market's true intent. When you uncover where the smart money is accumulating and distributing, you gain a clear edge in the market. Because these are the players that have the power to move the market with their large buy and sell orders and aggressive market behavior. But who is this smart money? Institutions. In general, we identify 5 types of institutional players. These are the hedge funds, investment banks, pension funds, high-frequency trading algos, and prop trading firms. By following this strategy we're about to discuss, you'll see how it captures the essence of market psychology, indicating potential reversals and continuations, ensuring you're trading with the smart money and not against them. This trading indicator is the Chiken money flow, a brainchild of stock trading guru Mark Chaikin. This indicator, often overlooked and misused, can be your window into the actions of market whales. It's a barometer of market pressure. By assessing the volume flow, the CMF distinguishes between accumulation phases, where big players are loading up, and distribution phases, where they're offloading. It's about reading the market's underlying currents. The Chiken money flow, or CMF, operates around a zero line. Above zero signals buying pressure, below zero indicates selling. But here's where many traders get it all wrong. In choppy markets, CMF can send false signals, challenging even seasoned traders. It's not always a straightforward read. Without the right approach, this powerful tool can give misleading signals. But we've decoded the best signals from this classic Wall Street indicator and optimized the way it should be used, so it's easy for traders to avoid false signals in any market, including crypto and Forex. This fusion of indicators you're about to witness is a secret we kept until now. Let me show you exactly how we use this tool effectively to be consistently profitable. Step 1. We need to set up your chart. Choose your market and time frame. It works effectively in crypto, Forex, or stocks. So let's pull up SPX on the 1-hour time frame. Now let's apply our indicators. Simply go to the Indicators tab and search Chiken Money Flow, or CMF. As for the settings, we recommend a 20-period setting for stocks and Forex, and a 21 to 28-period setting for crypto as it's open 24/7. If you're looking for long-term setups, then you can use the 50-period, but you'll find less signals. Okay. Now for the secret sauce that supercharges the Chiken money flow. Let's add the Shark Algo on the same chart. This is an invite-only indicator, so you need to go to the Indicators tab and go to Invite-Only Scripts and select Shark Algo. This will provide the tools needed to make the Chiken money flow indicator extremely powerful and accurate. This is how you'll avoid some of the drawbacks and false signals that the CMF indicator can provide in choppy markets with no clear direction. The next thing you're going to do is go to the indicator settings and turn on the market dashboard. Then make sure the Show Signals filter is turned on. Then you'll choose the optimal sensitivity displayed by the dashboard, or an auto sensitivity. Here I'm using mid-term, which works extremely well on the 1-hour time frame. Now make sure your Shark Algo settings have the Trend Cloud feature turned on. You have 3 options for the Trend Cloud, and this will depend if you're trading short-term or long-term setups. For most day traders and swing traders, you'll want to use the short-term cloud and the new version. Here, I've selected the short-term trend cloud. These steps are crucial if you want to make this strategy highly successful. You'll see how this all comes together in just a minute. It's very simple. Also, you want to turn on the automatic support and resistance filters and the order blocks. This will highlight the key areas for your take-profit levels and guide you on precisely where to set your stop loss. And finally, for additional precision and to spot institutional zones of interest, which will help you spot the strongest areas and turning points in the market, make sure you turn on the volume profile. This spots the big money accumulation zones and imbalances in the market from a broader perspective. Set the look-back period between 100 and 200. We like to use 150 on the 1-hour chart. Okay, now we have a clear methodology to snipe our entries and maximize our profits. Let me show you some examples on how this works. Identify your trade setup by ensuring a trend is present. Use Shark Algo to confirm the trend's presence and its strength. For a sell, ensure the price is below the trend cloud. For a buy, it should be above. This is how you'll decode the best signals, by trading with the dominant players and riding the wave with the smart money. To ensure we get the best signals, we need to make sure the conditions for our setups are clearly showing on the chart. Once we identified the trend, the reversal or the breakout will be trading using the trend cloud. We want to make sure the CMF is above 0.05 for a buy signal and below 0.05 for a sell signal. This gives us enhanced confirmation for the trade. In a bullish trade setup scenario, the trade trigger we are looking for is a buy signal to be present on the chart, and it needs to align with the trend cloud and CMF criteria. This means we want to see a green trend cloud and the CMF above 0.05. If we don't see this, then the trigger to enter is once the CMF crosses above this level on the close of the candle. Only then we enter the trade. In a bearish trade setup, the trigger is the same. We look for the bearish trend cloud, the sell signal, and the CMF needs to be below 0.05. In this case, everything meets our criteria, so we can enter the trade once the candle closes after the signal is generated. Once you've easily identified the trade setup with the criteria, and you've got the trade trigger, you must always define your risk with a stop loss. Aim for setups offering a minimum 1.5 risk-reward ratio, setting the stop loss just beyond a key level, or tucking it under the last swing high or low with a 5-point buffer to maximize your success. Next, you want to determine your profit target based on the Shark Algo key levels, using the automatic support and resistance feature or the supply and demand zones to make sure you're taking profits at these key levels in the market. These are based on real-time data and constantly adjusting based on the price action, since they are levels that the big market players have reacted to. The volume profile is powerful in this strategy since we can clearly spot the most traded prices and highest liquidity zones. When we see our key levels align together, this is where we want to take profits. Here we're looking at the Ethereum USDT chart, and we can see a buy signal was generated with a bullish trend cloud that is forming. But we're missing one confirmation in order for all the criteria to be met, which is the CMF to be above 0.05 for a buy signal, so we patiently wait until our criteria is identified before entering a trade. We set our stop loss at the invalidation point, meaning where the trade set up is no longer valid, so that's where we want to exit the trade if it doesn't go according to plan. The Shark Algo clearly identifies all the key levels, helping you identify the optimal entry and exit points. Another option is to set a limit order to go long when the price retraces into the demand zone. But I won't go into detail for this type of setup. Make sure to watch our next videos for different order types and advanced setups using the Shark Algo. This trade setup that you just learned will change your trading game forever once you start trading with the momentum and pressure in the market. So when the big players are selling and the bearish pressure and trend is forming, you want to be ready. And when they are buying and the bullish pressure and trend is dominating, that's when you want to buy. As I mentioned earlier, it's important to use the Shark Algo with the CMF, as the CMF will provide many false signals if you don't use the Shark Algo to filter out and decode only the best signals. So now let's quickly review the criteria and the steps before you go on and try this strategy for yourself. Number 1. We need to confirm that a previous trend has been broken or a new trend is forming based on the Shark Algo trend cloud. Price needs to be above the trend cloud for a buy signal and below it for a sell signal to be confirmed. Number 2. We need at least 3 confirmations to be aligned, which means we need to have the trend, the buy or sell signal, and the CMF to all fit within our criteria. Once we see this, and the CMF is above 0.05 for a buy, and below negative 0.05 for a sell, this is our trigger to enter the trade. Number 3. We need to determine our stop loss and profit targets based on the Shark Algo key levels that are identified. It's important to remember that we only want to take trades if the risk to reward is more than 1.5, and we can easily know this with the Shark Algo automatic support and resistance levels. And finally, let's touch on a key aspect of this strategy: the importance of higher timeframe market structure and trends. This is precisely why we recommend applying our approach to the 1-hour timeframe or higher. If the signals align in your favor, you're golden. So there you have it, a step-by-step guide to harnessing the combined power of the Chiken money flow and Shark Algo. Want to dive deeper and elevate your trading game? Head over to sharkalgo.com. Sign up to gain exclusive access to the Shark Algo indicator and become part of our thriving trading community. But wait, there's more. Join our Discord community to unlock a wealth of free resources, including our top-tier weekly crypto analysis, all at no cost. And for those who are ready to take their trading journey to the next level, our VIP Shark Algo community awaits. Here, you'll unlock all the premium strategies, signals, and insights from our elite analysts. Don't miss out on this opportunity to trade alongside the best. Join us now and transform your trading experience.